The ProShares UltraShort S&P500 ETF, SDS, is an exchange-traded fund, ETF, that seeks to provide returns that are 2x the inverse of the returns of the S&P 500 index. In other words, it is designed to provide investors with a way to bet against the S&P 500, or to profit from a decline in the value of the index. The S&P 500 is a market-capitalization-weighted index that is widely considered to be a benchmark for the overall performance of the U.S. stock market. It includes 500 of the largest publicly traded companies in the U.S., and its value is influenced by the performance of these companies as well as broader economic and market conditions. The SDS ETF is one of a number of inverse ETFs that seek to provide returns that are opposite to the performance of a particular market index or benchmark. These ETFs can be used by investors as a way to hedge their portfolios against market declines, or as a means of speculating on market movements. Inverse ETFs are typically structured as exchange-traded notes, ETNs, which are unsecured debt instruments that are backed by the issuer's credit rather than by any underlying assets. This means that investors in inverse ETFs do not have ownership in any specific assets, but rather are exposed to the performance of the underlying index or benchmark. One of the main risks associated with inverse ETFs is the potential for significant losses if the market moves against the investor's expectations. Because these ETFs seek to deliver returns that are opposite to the performance of the underlying index or benchmark, an unexpected market rally can result in significant losses for investors in the ETF. In addition, inverse ETFs can be subject to tracking errors, which are differences between the returns of the ETF and the returns of the underlying index or benchmark. These tracking errors can be caused by a variety of factors, including differences in the holdings of the ETF and the underlying index, as well as differences in the methods used to calculate the returns of the two. Despite these risks, inverse ETFs can be useful tools for investors who are looking to hedge their portfolios against market declines or who want to speculate on market movements. However, it is important for investors to carefully consider their investment objectives and risk tolerance before choosing to invest in an inverse ETF like the SDS.